Hey everyone, welcome back to another episode of Unlocking Doors. Today I'm here with Michelle Castle and we are talking about interest rates. So who better to talk about what's going on in the interest rate market than Michelle? You guys definitely want to stay tuned for this episode. So Michelle, people have been reading about it, they've been hearing about it, people can't stop talking about it that are looking at this. They're talking about interest rates and the fact that they have come down and the cost of borrowing money has gotten a lot more affordable over the past couple of weeks in the grand scheme of things. So what have y'all been seeing in the mortgage world? Where were rates at a year ago from now versus, maybe you don't know exactly where they're at, but
but
what
we
have
can
we
talk
seen?
general.
What have we seen rates do in the long, the last year, the last couple of weeks, the last couple of months? What are you seeing?
Well, you and I have even had this conversation before that rates are up. Yes, we know that, but the prices of homes are more affordable now than what they will be in the future when the rates go down. So, we knew rates were going to eventually go down.
Right.
And they are starting to go down. So, what's interesting though is what people are receiving in the mail and in what they're reading rates are. Obviously, a lot of it's just headline news. It's just attention grabbing. So what are rates? To answer your question, about a year ago, interest rates were in the mid 7s, high 7s. In some cases, people were paying 8 and 8.5%, depending on the loan program.
Right.
It wouldn't have been unusual. If you had seen a contract written and the financing addendum said 8.5% interest rate, you wouldn't have thought much of it. No big deal. That's just kind of what the market's doing right now. In the last week or so, we are seeing the mortgage rates go back down in the 6s. Yeah. And so that makes a big difference. If you're looking...
Are we talking high 6s or low 6s?
Mid 6s right now, and you can buy it down to the high 5s if you're wanting to spend the money to buy the rate down. Okay. Which a lot of people are choosing to do because they're comfortable spending the money to have a rate below 6 and not have to worry about refinancing. A lot of people bought houses in the last couple of years and just said, well, we'll just refinance when the rates go down.
Right.
So, which is then why we're having those phone calls.
Right.
We get people that bought houses a year or two ago and they bought it at a higher rate. They got a great deal on the house. Now they want to look and see, does it make sense to refinance?
So I've got a question about the buying down your rate. Let's say somebody's going to do a refinance, maybe a rate and term refinance, and they're going to go from like an 8.5 to, right now you said, let's just call it 6.5. Obviously that's, going to depend on their credit and all that stuff. Right. But are they able to buy down on a refinance as well? So they could essentially go from a 8.5 to something in the high 5s.
They could.
If they decided to do that. And y'all have a really cool tool. It's called Mortgage Coach that I'm a huge fan of. And the thing I like about it is the fact that you can plug in what their current rate is and their payments. You can plug in the cost of the buy down, the cost of the refi, and you can look at the break-even scenarios and talk about, does it make sense or not? What are some scenarios that would not make sense? Like if somebody says, hey, I want to refinance, what are some things that you might ask them on the front end where it might not make sense for them to do that? Well,
my first question is always going to be, how long do you plan to stay in the house?
Right.
Because it doesn't, even if you were going from an 8.5 to 6.5, if I ran the numbers, like if you were looking at, so let's just say you had a $250,000 loan.
Okay.
You might save from an 8.5 to a 6.5, you might save $300 a month.
Right.
But even if the lender's not going to charge you any fees, and remember, it was the dumbest saying ever, but you heard everybody saying, date the rate, marry the house.
Yeah.
With the anticipation that we're going to refinance you and we're not going to charge you any fees when we do.
Yeah.
Well, there's still fees associated in a refinance. Even if the lender's not charging you any fees, there's still going to be some fees. So you got to take all of the cost for refinancing the house and the cost of the loan itself. So at an 8.5 to 6.5, if you're going to save $300 a month, but it was going to cost you $5,000 or $6,000 or $7,000 to do that refinance, then you just have to take that, say $7,000, divide it by 300, and that's your break even.
Yeah.
So if you're not going to be in the house for a year or two, it's not going to make sense,
Right.
regardless of how much you're going to save.
Yeah, absolutely.
You're just taking away from your profit on
Yeah.
the house when you go to sell it.
And I think a lot of people get caught in that. They see the headline. They have some kind of, they get something in the mail with a call to action. We can save you $300 a month. Everybody wants to save $300 a month. But you have to look at all things considered, the cost of doing that, the time that you're going to actually stay in the home. So there's a lot of things that factor into that.
You know, it's really been making a lot more sense though, now that the rates have come down. You've been in the house a year or two, you've got some improvements, there's some repairs that need to be made. Now it's more affordable to get those repairs done by using the equity in your home. And you could refinance and pay off your 8 or 7.5% interest rate and get the money you need for making those repairs.
Right.
And that's a different conversation too, but it does help offset. You may not go up in payment to get the money that you need to do the repairs by getting that lower rate. So there's just a lot of options to go through and talk about. But
before you move on, one thing I want to point out about if we're talking about saving money each month. This is something that my insurance agent told me.
Okay.
If you do certain repairs, be sure and talk to your insurance agent about that, because there's certain things that could potentially lower your, lower your monthly payment.
Like plumbing upgrades,
plumbing,
water
electrical.
heater.
Yeah. If you do some of those upgrades, it could lower your insurance premium, save you money, and that's kind of the whole point of talking about dropping your interest rate, is to save that monthly payment.
And it's a good time to assess all of that at the time that you're doing a refinance.
Yeah, I didn't mean to cut you off there.
No, I love that, but that's a good point. I hadn't even really thought about that, upgrades.
Yeah, that's
those upgrades matter.
Shout out to Blaine Brawley with Goosehead Insurance. He's the one that gave me that little tidbit.
I like that. But let's talk about how the lower rates are helping home buyers.
Yeah.
So 2 years ago, if you're looking at, if you were comparing what interest rates were let's just say 6 months ago compared to where they are right now, there's about $25,000 more in home you could afford now based on the interest rates than you could
6 months ago.
Yeah.
So that really helps. When interest rates drop, it really helps everybody, honestly. You've got people who need to sell their home and they want to, get as much as they can. And then you've got people who want to buy, but they're looking, the people that are buying are looking at their monthly payment just as much as anything.
Right.
The people that are selling are looking at their bottom line.
Right.
And so that's where, being able to afford an extra $25,000 with the same payment can be huge. That could be, from settling for a certain type of property and getting something that you really wanted. So that's pretty powerful.
Or it could even be, we've talked before about buying and holding a property.
Yeah.
You could buy a house and roll in $25,000 more in home improvements at the time that you buy the house.
Yeah.
That for the same payment as it would have been 6 months ago. So, there's just, and then you think about all of these sellers that have 3 and 4% interest rates that don't want to leave their rate. Well, if they could buy a house and buy down a rate and get below 6%, it kind of closes that gap in their mind on, okay, well, I don't like this house. We do want to sell. We just didn't want to let go of that rate. Now it makes a lot more sense to let go of that rate. So we'll continue to see the trend. I do think that the market will just kind of do this a little bit. We'll see some days where, there's a big rate drop. And for anybody that's wanting to take advantage of a big rate drop, I think you need to make application. If we have application on hand and we have the loan ready to go, as soon as there's a drop, I can just lock in and we're ready to go.
Right.
To try to time it perfectly. Is there such a thing?
Yeah, there's not.
No.
There's not.
But you got a better chance of timing it when it drops. But I think the trend will continue.
Yeah.
So I think we're off to a good start in a strong market.
So let me ask you this, and I'm going to put you on the spot.
Okay.
I know you don't have a crystal ball.
Okay.
Where do you see, we're going to see some more volatility as we get closer to the election. We're going to see volatility in just all financial markets probably. Where do you see interest rates kind of stabilizing out, and when do you see that happening?
I'm going to go straight off a gut because you can read all kind of reports.
Right.
And I want our listeners to understand that mortgage rates are, like our market is as moody as a teenager. Seriously.
Yeah.
Like any little thing can set off our market. It
Right.
could be a comment that somebody made and it has people scared of, and it could be some weird something over here in the stock market. Like we are so fickle and we are so based on emotions.
Yes.
And so, and we have a lot of emotions going on right now. So back to your point, we're going to see a lot of this, especially with the election going on, and the market's going to react with the results. The market's going to react just to everything.
Yeah.
But I do think that we're going to settle, and it probably won't cost 2 points to buy a rate down to be in the fives. I think we'll settle and be in the fives. And
Maybe
I think
like
if
mid to high fives.
mid to high fives is
Yeah.
going to be a normal, I think that you're going to be able to spend some money and buy some rates down below that.
Yeah.
Maybe even in the high fours if you're going to spend enough money, which might make sense if you know you're going to be in the house for a while.
Right.
But I think that will be more of our normal market.
Okay. All right.
Yeah.
Well, that, like I said, I'm not going to hold you to that.
Yeah. These are recorded and people can play back and go,
Yeah.
gosh, my gosh, she has no idea what she's talking about.
Yeah. And they're, like you said, any of the presidential candidates or political figures can say or do anything.
Anything
just-
can go on the other side of the world and
Yeah.
it affect the market. But I do still think that we will see rates normalize in the fives.
Okay. All right. Cool.
Yeah.
So
But you and I've talked about that before. Don't wait
Yes.
for that to happen because you're costing yourself more money the longer you wait.
Let's dive into
prices will go up.
let's dive into that
do
a
it.
little bit, because I want to differentiate waiting if you already own the home and you're going to stay there,
Yes.
and maybe you have a higher rate. And
Okay.
does it make sense do you refinance? If you have an 8.5 and you're looking at a 6.5 now, or buying down to, maybe you buy down to 5.5 or high
Whatever
fives,
you're
high
willing
fives,
to pay. Yeah.
Do you do that now, or do you wait until they kind of get there and then you buy down into the low fours? So there's that aspect of it. And then there's the aspect that I think you were talking about of, if you're looking to buy and you wait until rates drop fairly significantly, that's whenever you're going to see prices and demand, really demand from buyers is going to drive prices back up in the real estate market.
Yeah.
I think
right.
that's what you were getting at. But
That's what I was,
differ-
yeah, I'm glad you said that because that's true. If you're looking to save money on a refinance, we need to just crunch the numbers.
Right.
Because you're paying that extra interest, and waiting is going to cost you what in interest. So we need to look at that.
Right.
And it's just number crunching. You're right. I got great tools for that.
Right.
And if you're waiting to buy a house till the rates drop, that's where my concern is. You're going to pay a lot more for the house than what you would have saved to buy now, and just look at refinancing later.
Right. Okay.
Yeah.
Well, that's all really good information. This was a fun conversation for me to have, being on the consumer side and in the, on the realtor side, kind of getting a glimpse behind the curtain of the mortgage side. So thank you guys so much for checking out this episode of Unlocking Doors. We had a fun time talking about mortgage rates, what we've seen lately, and how it could affect you. If you have specific questions on should you refinance, should you buy, what do you qualify for, Michelle is your gal, and she can talk all things mortgage. Thanks for checking out this episode, and we will catch you on the next one.
Yo!